What's up everyone, it's Scotty with MoneyVest. So in today's video, we are going to be talking about the returns so far on a year-to-date basis and over the last 1 year as well. I'm going to run through very quickly some of the positions that I have, which ones I'm obviously up on, which ones I'm not so much. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. The November 16% annual discount will end and expire tonight. Actually, tomorrow night. So tomorrow night is the 30th, and tomorrow night we will kind of get rid of the 16% annual discount. So if you want to join, I have opened up a few more spots in November. So link's going to be down below. And again, we'd love to have you on board as a MoneyVest member. So this right here is something that I posted in our community. So I posted this earlier, literally just a few minutes ago, basically talking about folks wanted to share this. This year has been absolutely crazy. And tech has performed incredibly well, as we already know. And in terms of percentages, this is a record year for me, and I'm sure it's the same for you because the markets have been on this crazy ride higher on the back of Tesla, Meta, Nvidia, Google, AMD. Of course, our entire market updates are focused on technology stocks, and most of the tech really just carried the markets this year. And here's my 1 year return calculated by Fidelity. So I'm not doing anything. I literally just went to performance, 1 year, year-to-date performance calculated by Fidelity, compared with the S&P 500. For full transparency, I also did share my VBull portfolio, which is, as you'll notice, is down over 5% year-to-date. And that is primarily because of the underperformance from both Walgreens and LABU, right? So LABU being a biotech stock. Although I do believe that 2024 has a lot of potential for biotech, and it is still, in my opinion, there is dislocation there, that there is more value for the price that it's trading at. IBB has somewhat performed better than XBI. XBI is a little bit more small cap, mid cap biotech sector, and Walgreens, as we already know, has underperformed, but the dividends have certainly helped salvage some of those losses. But at the same time, it is still down on a year-to-date basis. I think Walgreens is still underperforming pretty dramatically, right? It's still selling off now sub $20 year-to-date. The stock's down over 47%. So really, I mean, that's one of the reasons why this portfolio right here, my VBull one, is year-to-date down over 5.3%. For full transparency, I want to share my year-to-date returns with you guys because I think it's really important. And I'm telling you, like Walgreens, LABU, and PayPal, like some of those companies have certainly underperformed. But since I was so over allocated on Tesla, on Meta, on VUG, like the Vanguard Growth Index, a lot of them, obviously that's helped push the portfolio, especially when you look at the Fidelity, 1 year return, it is up 22%. These are multiple different accounts, and this right here is my year-to-date on the same account, which is up 47%. And this is the growth account, which had, of course, Tesla and Meta in their 1 year cumulative pre-tax return, as you can see, over 82% compared to just under 15% on the S&P 500 last 1 year for this one as well. So that's where we are. And I also mentioned, that the TD Ameritrade, which is a separate options account, that is also up 24% because that's specifically for options only. So I'm mostly trading Tesla options in there. I've got a position in TMF actually in there as well. That's TMF and both Enphase is actually in that portfolio. Enphase is down a little bit over 30% right now in that position, but Tesla is up dramatically from when I bought it. So that obviously is overcompensating everything. And I've also got Tesla options in that portfolio as well. Not to mention TLT, TMF. TMF more specifically, I don't own TLT, but TMF is up significantly. 10% from when I bought it. I actually did pick up a lot of shares. If you come over to the alerts, you'll notice that I did send out an alert over here. So on November 8th, so beginning of November, I sent out an alert saying, picked up 2,000 shares of a TMF at 475 because I was kind of starting to sense a little bit that there's more potential upside for TMF, and it's starting to really find a bottom here as yields continue to kind of peak at that 4.5%, close to 5% level. And of course, we're starting to see that roll over. Now it's at under 4.3%, and as a result, TMF is up another 2%, pre-market to 525. It's already moved up 50 cents from when I bought it, right? So at 2,000 shares at 475, so it's 525 now, so at 50 cents, that's about $1,000. I think that's exactly how much I'm up, close to 10% on that position. But I do expect more upside on TMF. But that's for a separate video that I want to go over. So, the basically the gist of this video is obviously showing you guys my performance. Some stocks and some sectors are certainly underperforming, right? So Walgreens and biotech and even fintech when it comes to PayPal, but then technology had a very strong year. But I also don't want to get into the habit of trying to beat the market every single year, because I think that's a very, very institutional thesis, and that's a very, very institutional sort of oriented strategy where you are trying to beat the market every single year because you've got a prospectus, you've got an investor relation team, you're trying to pitch to other clients to invest with you. And I think, why would investors invest with you if you're not beating the market? So that is a very, very different type of game. I'd much rather focus on high value, high quality companies. And even if they do underperform in a given year, so for example, even if I were, let's say, down on a year-to-date basis or in the last 1 year because tech underperformed or tech did not do very, very well, that would have been fine. At least I would have known that I own a lot of high quality companies, right? Let's say that I own Tesla, let's say that I own Meta, I own Google, I own AMD, I own Vanguard as a diversified ETF and index fund that has a lot of other stocks like Apple and Nvidia. At least I'd know that, okay, I own a lot of high quality businesses and companies that I really want to invest in for the long term, that have a lot of potential in the future to grow. Even if they're underperforming, I would not switch my strategy. I would not go after chasing returns. Let's say energy is performing really well or something else is performing really well. I wouldn't just like ditch all my tech stocks and move over to energy, because people who did that, let's say that you did that in 2023, obviously you have underperformed significantly because you're not in tech. In 2022, energy was the best performing sector, right? As institutions and hedge funds try to go after what's best performing and go after chasing returns, that's what they do, and it's called style drift, right? Style drift is a very, very important concept that I think everybody needs to understand, is that your style of investing, your style of participation in the markets is very important, and you need to stick to your strategy. You need to trust the process, that over the long term, things will work out, right? As long as you're doing the right things, as long as you are patient, as long as you are trusting the process, things will work out. Any short-term gains, any short-term profitability, instant gratification is not going to last long, okay? For long-term success, I think it's really important for us to be patient, trust the process, slow and steady growth, consistent growth, right? As I mentioned before, base hits over home runs, right? Once in a while, it's great to hit a home run, but long-term success comes from hitting base hits, right? Consistent base hits is where the long-term success basically is. So with that analogy, with that sort of a lesson, I wanna end this video, and just really wanted to show you this. And I think it's really helped, having everybody's support, and just the community is absolutely amazing that we're building here. More and more members are joining every day, so I'm super grateful and thankful for all of you. And I'm really, really hoping that this was a record year for you as well. If you've been following the channel, if you've been watching us, of course, technology has been the core focus of the channel. We've been talking about tech stocks, a little over 3 years now. So I'm really hoping that you also had a phenomenal year. And I wish you nothing but the best. And we've got 4 or 5 more weeks left. Let's close out the year super strong. So hope y'all enjoyed it, found it helpful. Make sure that you drop a like, subscribe to the channel, do all that good stuff. If you have any questions, please feel free to reach out. And looking forward to an even better 2024. Happy investing. I'll see you all in the next video.